As we all try to understand what meaningful assistance the Coronavirus Aid, Relief, and Economic Security Act, known as the CARES Act, can provide, Rochester Community Foundation decided to host a briefing last Friday to focus on how nonprofit organizations can benefit. You can continue to view that briefing on demand at racf.org/caresbriefing. The timing was particularly urgent because applications for the Payroll Protection Program section of the legislation opened on April 3rd, last Friday. These loans are being offered on a first come, first served basis, and so we encourage you to get more information. Our partners at Harder Seacrest and Emery, Five Star Bank, and Causeway Community Partners joined us to lend their expertise. They've come back today to share their further understanding of how the Act can assist nonprofits and position us for a strong recovery. We're joined today by Emily Cohen, attorney at Harder Seacrest and Emery, John Fogel, Rochester Regional President for Five Star Bank, and Todd Butler, President and CEO of Causeway Community Partners. We'll start with brief introductions, and then we'll go with Q&A, which is generated from questions that came in from the briefing which we offered on Friday. Let's start with Emily.
Hi, Simeon. Thank you for having me. We're happy to be here today and help people navigate through this process. I just wanted to quickly touch and just note that, as we mentioned, I'm sure at the last presentation, things are continuing to evolve and change. The application process is now open and banks are accepting applications for the Paycheck Protection Program, or the PPP loan, and as well the economic injury disaster loans. Those applications continue to be live through the SBA website. So I'm hopeful today we will be able to address some of the changes and updates that have happened since we last touched base and talk through some questions that have come up.
Thanks so much, Emily. Next, we'll turn to John from Five Star Bank.
Thanks, Simeon. We're very excited to be here again today and following up on our conversations that we had Friday. As Emily mentioned, the guidelines did come out late Thursday, and we've been trying to review those as an organization, and even those things continue to be fluid and challenging and change throughout the last handful of days. The role of a banker has been much different the last few days than it was previously, and lots of time and effort has been spent, not just Friday since these came out, but over the weekends, Monday, and here we are Tuesday already. But as I mentioned, lots of things have changed. Just to highlight a few, the information that came out late Thursday and we were able to review on Friday. An application was finalized by the SBA and put on their website, which is the SBA.gov website. It is a slightly simpler form than the previous draft we viewed. If you were to look on the application, page 3 of the application, it defines specific periods which can be used for the payroll calculations. That was one of the questions that we were waiting to hear from that. And specifically in regards to that, for most companies, it's going to be their full payroll for 2019. For seasonal businesses, it's going to be their payroll as of February 15th of 2019 going to June 30th of 2019. And for new businesses, it would be from January 1st of 2020 to February 29th of 2020. As we noted before, the program will run until June 30th of 2020 or until funds are exhausted. The clarified that the SBA will allow lenders to rely on the borrower certification to determine eligibility, use of proceeds, qualifying amounts, and eligibility of forgiveness. Yet some of those details haven't worked out specifically in terms of eligibility of forgiveness, the amount of the forgiveness, and how we're going to actually fund these loans. The borrower must submit the documentation to establish eligibility, such as payroll records, payroll tax filings, Form 1099, or income expenses when it comes to sole proprietor. Bank records may also be used as a fallback if necessary. Average monthly payroll is multiplied by 2.5 times, and then you have to take your consideration of your outstanding EIDL loan, into the equation, and you can subtract any advances on there, and that amount can't exceed $10 million, as we knew before. Payroll costs were defined in a little bit better clarification with this latest guidelines. As noted before, some of the specific terms, the interest rate will be 1%, the maturity will be up to 2 years. And just to clarify, you can only have one of these PPP loans out at one time. Note for payments, there is a 6-month deferral of principal interest. And as we highlighted before, it did come out in the guidelines that proceeds can be used for payroll, but also payments of interest on mortgages, rents, utility payments, interest on refis of idle loans. However, that's limited to 25% of the total proceeds. Additional liability and so there are no personal guarantees, but the borrowers are potentially open to additional liability, potential fraud charges if the information is not accurate. And the banks have to follow certain typical protocols that they might have for compliance issues in regards to that. And as I mentioned earlier, a lot of this stuff came out, but at this point in time, we still don't have any formal way of notification of funding these. There's no note that's available to us yet, and there's still yet no details on the back end of this where the forgiveness comes into play. Thanks, Simeon.
Thanks so much for the update, John. We really appreciate it. Next, we want to turn to Todd Butler, President and CEO at Causewave Community Partners. Todd.
Thanks, Simeon, and thanks for having me back. I'm happy to be with you all today to try to help answer some of the questions that are coming up. Causewave continues to meet with nonprofit organizations every single day at no cost to those organizations. We're having these virtual meetings with Causewave staff members and community volunteers to help these organizations figure out the best way to respond and sustain their missions during this difficult time. So we're helping organizations with everything from crisis communication to virtual operations to fundraising and even thinking through some of these different funding opportunities, again, to sustain the mission and maintain their payroll. So we're happy to help and looking forward to matching up with more organizations who are in need of this free support that's made possible by generous community funders. So we're looking forward to answering questions that come up in the Q&A today.
Great, thanks so much, Todd. So as a reminder, last Friday, we got together, talked a little bit about what was in the CARES Act as it related to nonprofit organizations. Since then, we've been collecting questions from nonprofit organizations around the community who are trying to understand the specifics and get more detail. And so that's where these questions are drawn from. We'll start with the first question, a really practical one for John. John, given the social distancing rules that are in place, and if I want to apply for one of these loans, do I come to a branch or can I just apply online? And if online, how do I do that?
I think each individual bank is probably a little bit different. As I mentioned earlier, this is very fluid and challenging times for the banks. It's an overwhelming demand for this. Initially, what we established in our organization was more of a paper process and submitted through electronic forms, whether it's scanning, etc., or it can be it could have occurred at a branch where we're doing probably more of the drive-in type applications accepted through there. Over the weekend, we worked hard to really, on our website, to create an online portal that we tested out yesterday. And we are trying to, at this point in time, trying to make some modifications to that to get that back up and running. So we had it running most of yesterday. We found a few glitches there and back up and running. But for the most part, we're taking applications both through our relationship managers, our retail bankers, and we've done the online portal and hoping to get that back up and running here fairly soon.
And John, just to clarify for viewers in case it wasn't clear, you guys just got the guidelines for this Thursday night and then had to build all the software, the programs, and so on and so forth, and put all the processes in place. And you guys had to do that over the weekend?
Exactly. Well, we had to do it. We had to be prepared to start taking these applications on Friday morning, and I don't recall exactly what time they came out on Thursday night, but it was Thursday evening, probably close to 8 or 9 o'clock in the evening when these guidelines came out. So you are absolutely correct. The positive thing about this is that, you know, from the banker's standpoint, we have to put the process in place, but the application that the SBA came up with was fairly simple. As you can, if you go on the SBA.gov website, you'll note that. And the information they require is typically information to support it is typically information borrowers will have readily available to them in the form of payroll records.
Thanks so much, John. Emily, there are a lot of programs that are included in this bill. There's the Payroll Protection Program, economic injury disaster loans even existed before this bill. Can you talk us through some of that? And specifically, the question that we received was, if a company is taking out a loan through the Payroll Protection Program, can it also take the payroll tax credit on workers? Can it take the economic injury disaster loan? And how does loan forgiveness come into play for all of these?
Yep, absolutely. The first kind of general point is, if you're taking a payroll protection program loan or a EIDL, the economic injury disaster loan, you cannot also take the payroll tax credits. So that's just an important point to note. The loans do not work in conjunction with the payroll tax credit. However, you can take the PPP loan, the payroll protection loan, and the EIDL loan. You can take both of those. If you have already applied for an EIDL loan, remember those applications are available directly through the SBA website. If you have already applied, when you fill out your PPP loan application, you will note that you've already applied, and you will link that information into that. If you apply for a PPP first, we're not clear exactly how it will play out if you get the EIDL after. What we're thinking about when you're thinking about the forgiveness piece, we had mentioned that the EIDL loan, you're able to get a $10,000 advance credit, a $10,000 non-refundable amount of money. From what we understand, if you apply for the EIDL initially, then you apply for a PPP, that $10,000 credit will be rolled into part of your forgiveness amount. So you will end up including that initial credit from your EIDL in your PPP loan. The loans do interact with each other. What we would recommend is that if you are considering, or you have already applied for one or the other and you're thinking about applying for the next, is reaching out to your banker or your lending institution who you're using for your PPP loan and making sure from their perspective there's not going to be any glitches along the way. Just one other point I want to mention too is, if you're applying for a PPP loan, those are predominantly to be used for your payroll costs. So you should not be taking out an EIDL loan for payroll costs in addition to a PPP, because that will impact your eligibility for your payroll costs under the PPP loan.
Perfect. Thanks so much. One other quick follow-up question. So it seems like all of these loan products are uncollateralized. And one of the questions that we received was whether there are penalties for defaulting on the loans and how that might work.
Sorry, I have a small child right in front of the door here. The loans, so some yes and no. The PPP, the Paycheck Protection Loan, is non-collateralized. It's 100% guaranteed by the federal government. So the guarantee is back on the government instead of the organization itself. The SBA is not requiring any collateral, and they're not requiring any personal guarantees. On the EIDL loans, they're different. They do require collateral. If you're requesting in excess of $25,000, it will likely be in the form of an all assets lien or a commercial mortgage, or a personal mortgage if that fits as well. They've increased the threshold, but it's a $200,000 loan threshold for a personal guarantee. So if you're asking for more than that, you should expect that you're going to be giving a personal guarantee. I know in the not-for-profit world that is trickier than in the for-profit world. How does a not-for-profit give a personal guarantee? And one thing I think that's important to keep in mind when you're thinking about any of these programs with not-for-profits is the SBA is really catching up to the idea that not-for-profits are now included in these programs. So in the past, where they would have said with any of our disaster loans, we have to have personal guarantees, they're going to need to rethink what that looks like for a not-for-profit. So where they may require a personal guarantee for a for-profit organization, if in a not-for-profit sense you're not able to give a personal guarantee, perhaps they will take out more collateral to get themselves comfortable. But again, that only applies to the EIDL loans. On the PPP loans, the recourse is against the government. They're 100% guaranteed by the federal government.
Great, thanks so much. Todd, we know that this is a huge decision for a lot of organizations because though pieces of it are forgivable, it is still taking out debt. Can you give us a little bit of advice in terms of board engagement and in terms of some of the decision processing that you might advise for nonprofits on matters like these?
Sure, Simeon. It's absolutely correct, and I know one of the questions we received was a concern about an inability to engage your board in this process in a timely way. Certainly, depending upon the bylaws of the organization, sometimes those bylaws will stipulate if there is any debt obligation that the organization is going to take on, that the board must approve it. So it really is important for nonprofits to understand their bylaws and to operate within those bylaws. Many organizations have added the ability to communicate via email with their board members, or to have the executive committee operate in the stead of the larger board. So in the case of CauseWave, we actually submitted for a PPP loan ourselves on Saturday morning. But before I did that, I reached out to my executive committee and had those folks in the loop on that, so that even though I expected that they would support it, that it was important that they understood what we were doing and what the reality of the program was, because unless their business had been applying for it, they might not have been aware of the different components of the opportunity. So it's important to engage the board via phone, via email, of course, any other ways that you're communicating with your board on a regular basis right now, and make sure that those folks are on board with and supportive of the idea of the organization applying for this program. I guess one thing I would say to many organizations are struggling financially at this moment. Some other organizations have a small amount of cash reserves that they are burning through right now. So I would encourage that in conversations with boards about the need to apply for a PPP loan, that they be looking down the road as well as where they sit at this particular moment, knowing that we are uncertain of the duration of the crisis and uncertain of how long before things like fundraising events that have been postponed, when are they going to be able to happen again? And so I think that certainly applies in the certification of need category for organizations, and making sure that the board understands why it's an appropriate thing to be considering at this point, I think is also part of something that an executive director or a finance manager or even a board chair in the case of an unstaffed organization might do.
Todd, just a quick follow-up, if you can even extrapolate out a little bit more and kind of situate these products in a broader strategy to kind of get through this period. You've mentioned the fact that a number of organizations had events planned or other, significant revenue-generating opportunities that they are going to miss out on. Again, if you can help us to just contextualize, how might you, as a kind of a strategist, consider utilizing these products to get through this challenging period for the next few months?
Yeah, I think these products ought to be looked at as part of a broader strategy for organizations. And so if your organization has had an event that needed to be postponed, thinking through what's an appropriate time to reschedule that for, and what is the reality going to be of that event at its rescheduled date. And so many organizations that had events scheduled for the spring have postponed them to the fall, which means we're going to have an extraordinarily dense fundraising environment in the fall of 2020. And it's possible that some folks are going to be less comfortable being in crowds. If you were hosting a gala for 500 or 1,000 people, it may be that your attendance is going to suffer, not just because of competition, but because it may be that some of your supporters are uncomfortable being in those kinds of groups. So it's important to have realistic expectations about rescheduled fundraising events and when they're going to, what kind of revenue they're going to generate. Also, we're encouraging organizations to be in regular contact. If they have not already, they should very, very soon be in regular contact with their major donors and their funders. What we're finding is that foundations are answering the call of this issue. So if you have an existing funding relationship or even just mission alignment with a foundation, to reach out to that foundation today, make them aware of how your organization's services have been challenged by this crisis, and find out what kind of emergency funding those foundations are doing. Many foundations in our area are really stepping up to support nonprofit organizations in this crisis. And the last piece that I would say is being in regular contact with your donors right now to check in with them, understand how the virus may be affecting them, but also let them know what your organization is doing to help the community respond to this crisis and the challenges that it's posing for your organization. Now is not the time to be silent. Now is not the time to defer to others. Your organization exists because it provides critical resources to the community, even if those resources aren't healthcare resources, which is the most obvious connection. Arts organizations, for example, are helping families stay home and be healthy and safe. So there's really no organization that has not been touched by this. And so considering these programs, in addition to existing funding streams and how they are going to need to be different in this new world, is an important piece for everyone to consider.
Thanks, Todd. And just one more follow-up, just because you did mention the relationship that folks have with funders and their donors. Is there any concern, particularly for organizations that are operating on really slim margins? Should they be concerned about being perceived in a negative light? On one hand, we heard you mention that folks shouldn't stay quiet. And then on the other hand, we know that there can be some nervousness and reticence around fully exposing an organization, particularly when the funding might and this organizational sustainability might be in question. Any advice on that front?
So my advice would be for organizations to not expect that foundations believe that this crisis isn't affecting them. So funders and foundations, in my experience so far, have been very open to the idea that there's additional and unprecedented support that's needed for nonprofit organizations as they work their way through this crisis. I think I have not, in my conversations with multiple foundations, I have not had one of them say that it raises a concern for them if there's a nonprofit organization that is struggling at this time. This is truly unprecedented, and especially if you've got an existing funding relationship with a foundation, that is a testament that they believe in the mission of your organization and want that mission to be sustained. So it's appropriate to have those conversations with funders, I think, in a pretty forthright manner at this point in time.
Great, thanks so much, Todd. Emily, turn to you, and just curious about kind of two questions that were related. One was an organization noted that they had already had to lay staff off due to the crisis, and we're curious if in order to receive the full forgiveness, they needed to hire them back. That was one question, and then another related question is, instead of layoffs, we're looking at furloughs. How does this impact loan forgiveness?
Yes, under the forgiveness section, from what we understand so far, if you have laid off employees or furloughed employees, you will, in order to be able to receive the 100% of the forgiveness amount that you're eligible for, have to bring all of those employees back. So you'll have to bring back the unhired employees. You'll have to bring back not exactly those exact employees, but you'll have to bring back the full-time equivalent of the employees that have been laid off. And you'll have to do that before June 30th, or kind of depending on when you get your loan during your forgiveness window. On the side of furloughs, if you've decreased the salary of your staff by more than 75%, that decreases the amount of forgiveness that you're eligible for. So companies that have furloughed employees will have to bring the salaries back up so that they're being paid no less than 75% of their current salary, again, by June 30th, or depending on when you get your loan within that forgiveness period. If you are in a position where you're thinking about making future furloughs or future layoffs, regardless of whether or not you get the loan, you should reach out and speak with your attorney or your accountant or your banker before doing so, because there are restrictions on making further layoffs or further furloughs under the act. But if you have already done so, don't think that it denies you the ability to get forgiveness. You just have to restore the full-time equivalent employees and restore those salaries before you're eligible for the entire forgiveness. And just one more thing on that, it's not a bar entirely for forgiveness, it's a reduction. So if you only bring back 75% of your workforce, your forgiveness amount is just reduced. It's not entirely diminished.
And thank you for that, Emily. And just as a clarification, in terms of the obligation under the loan forgiveness, is it you guys understanding that it's the number of positions, or is it the actual payroll dollars expended that needs to match from year to year?
We don't really know entirely yet. It's not 100% clear if the payroll calculation is going to be, it has to match what you gave in for your payroll costs. It's got to equal that match wise. But from what we see in the law, it looks like it's not the exact employees. You don't have to, if you had to lay off employee A, you don't have to bring back employee A per se. You just have to bring back the full-time equivalent of that position. If they were full-time, you could end up bringing back one or more part-time employees to get to the same hour equivalent. And then there is also the piece of the payroll. If you do decrease payroll costs by more than 75% for any individual employee, you have to bring that salary back up.
Terrific. So the idea here is not that, and certainly we know that hopefully an organization would be approaching it this way, but that they would wait right until the loan the forgiveness window was going to conclude June 30th, and then bring back everyone. That there would need to be, is that a fair conclusion?
Yeah, we've been getting that question, is what happens if I don't bring them back immediately, or I wait? And then also what happens if I bring everyone back for June 30th, but then on July 1, people are no longer there. So there's got to be some additional guidance from the Treasury on this. I mean, I anticipate that they will have, they'll have some type of guidance about when you bring it back. Another question we're getting is, what if I get my loan, if I get my money on Monday? Excuse me, and my 8-week period starts Monday, but I'm not able to bring people back because I'm not an essential business, and people can't actually come to the office. What do I do then? I'm just paying people to sit at home. And again, this is something we're waiting for additional guidance on from the Treasury to make it clearer if what you do with those people who are furloughed or were terminated because you just literally don't have the jobs to fill them with, and they are unable to work at home.
Thanks, Emily. John, a couple of rapid fire practical questions for you. Question number one, who can I apply to the loans through, and when is the earliest we can expect funds to be dispersed?
As of right now, you can apply through any financial institution that's approved as an SBA 7A lender and some other designees that they provide. In regards to funding, we don't have the answer to that ourselves. The SBA hasn't come out with guidelines. As I mentioned before, a note that the borrower would sign, so we're waiting for information on that. What we're suggesting to folks that are applying through us, that it be an existing depository customer of ours, so when those guidelines come out, it makes it easier for us to fund a loan. Once the note is executed, we could potentially transfer the money right into the depository account and have it available for them. We've noted some customers have desired to have a new account and monitor their activity within this new account just for these PPP proceeds and use of proceeds.
So related question, also probably in the category of unclear from the Treasury, but we'll ask anyways. When they say first come, first serve is what we understand the loan program to operate on, the $350 billion that the government has set aside. Is that first when a applicant submits to the bank, when the bank submits to the SBA, or when the funds are dispersed? So how do you get in line was the question that folks were wondering. Is it that all of Five Star then submit its loans and then that's what generates the first? Is it the bank, or is it the actual individual application?
That's a good question. I guess the way I would word it, I've seen it worded like that also, but maybe another way of wording that is until the funds run out is what I've commonly seen on there. And I think that's in the guidelines also from that standpoint. Our process is, let's just say we've got an application in from our side of things. We have to submit that to the SBA for approval. We get a number from the SBA verifying that we've been approved. And at this point, that's all we know right now. So all we're able to tell folks once we do these one at a time, and once we get approval, right now we're able to tell our borrowers is that you've been approved by the SBA. We're assuming that means that that's acceptable, and we're awaiting funding process from them.
Got it. And so that answers the next question, but if you want to elaborate a little bit more, who actually approves the loan? Is it the bank, the SBA, both?
That's a good question. That the bank does approve things, and the SBA approves it also. So it has to go through both process. But when you look at it from a bank's perspective, there's not a significant amount. It's not your typical underwriting or due diligence that's needed in regards to that. It's a simple application. There's no credit scoring. There's no collateral. There's no personal guarantees. So we're relying a lot on the documentation that gets executed, and the SBA or the SBA's 100% guarantee on this.
Thanks, John. Emily, a lot of the nonprofits that we work with also work with gig workers, with freelancers, with independent contractors, and they wanted to be able to share information about the bill in terms of how it impacts those trusted and valued partners that they collaborate with. Are gig workers, freelancers, and independent contractors covered in any way through this bill? Is there any benefit for them? Can you guys hear me? Hello?
Yes, John can hear you. So in response to your question, I think you were getting at was whether they are included in this. And yes, I believe that sole proprietors and independent contractors are included within the CARES Act and what's available to them. The opportunity for, although their application period has not yet arrived, I think they're able to apply for PPP loans starting April 10th, which is Friday.
Thank you.
Yes, sorry, Simeon, I cut out for. Oh, sorry, I just cut out for a second there. I just want to add one piece to John's answer, which was perfect. It's just that one piece of guidance that we did get late Thursday or Friday from the SBA and the Treasury is that in the payroll costs for the not-for-profit itself or the business concern itself, you cannot include those independent contractors as part of your payroll costs. There was some ambiguity around that point up until that time, but those payroll costs by the independent contractors, the gig workers, the freelancers, anyone with those 1099s, that has to only be covered by those individuals themselves.
Thank you. Emily, just an additional question. We have the good fortune to work with nonprofits, both large and small. This one came from a small nonprofit who's wondering, they operate with a working board and one employee. Would they qualify for the loan?
Yes. Yeah, there's no minimum size requirements. So, down to sole proprietors, and as John mentioned, independent contractors could apply. It's the top end has the employee requirement.
Okay, and then another follow-up is, what's the difference between the payroll tax credit created for coronavirus and paid sick and family leave, and then the payroll tax credit in the CARES Act?
I can't speak so much as to the payroll tax credits under the paid family leave and the other side of it. That's really more of my employee and labor benefit folks. I would recommend if someone's interested in kind of understanding the difference between those, that they reach out to someone who can talk them through it from an employment and labor standpoint.
Sure. Todd, this question's for you. Is this an opportunity, to the extent that we're borrowing these funds, a chance to message about organizational sustainability to our respective audiences?
Absolutely. As I have been saying to many organizations, now is not the time to be silent. And now is the time to be talking about the importance of your mission and to really be building the brand of your organization among your supporters and your constituents. So we're encouraging organizations who don't have a direct impact in healthcare, for example, to be looking at ways that they can be serving the community and supporting the community through this crisis. It may be as simple as sharing information with their constituents who certainly have concerns about what's going on, or it may be adding an additional service that helps families who are sheltering at home. So, and not only doing that activity, but ensuring that your supporters know that you're doing that activity is a really important step to take as well, so that you don't talk to somebody a year from now and say, these are all the things that we did during that dark period, but nobody knew about it at the time. So talking about the sustainability of your organization's mission is a really important conversation to be having at this time, again, with those key audiences of your donors, your funders, area foundations that you have a mission alignment with, and others who have the opportunity to support your mission.
Todd, one quick follow-up question. A number of organizations we know that might be viewing are like the questioner above, very small organizations. Maybe they don't have that capacity in terms of a finance person or some of the kind of specialty niche professions. Can you talk a little bit about capacity and how folks might address these challenges?
Yeah, Simeon, I don't think you can see my notes from where you're sitting, but I had just made a list of the kind of the order of operations that I would recommend, especially to small organizations or any organization really, as they're thinking about how to sort this out, for the financial sustainability of their mission out. And I think, if you have a finance officer on staff, of course, that's the first person to turn to assess these options and the need of your organization. Barring that, talk to the treasurer on your board. Hopefully you have a board member who has some financial expertise serving in that role on your board. Failing that, if you are an organization that has to have an audit, you have an accounting firm that you've got a relationship with, that's another good resource to turn to. Failing that, going to your banker directly. Those bankers are all overwhelmed with the requests and the need that they've got right now, but that's always an appropriate email to send or phone call to make. And I guess I would say your next best bet might be to reach out to an organization like CauseWave, and we're working to connect volunteers, as I mentioned, in these consults that we're doing for nonprofit organizations, and may be able to provide some guidance or connection to a finance professional, for example, who does not have an affiliation with your organization, but has been idled by this by the COVID-19 crisis and is interested in doing some volunteer work. And we've got a number of folks like that who are happy to try to make those connections. So that's the order in which I would look for consultation and support specifically to CARES Act.
Great, thanks so much, Todd. You mentioned some of the challenges that folks have had even with applying. And John, I'm just curious, we know that each bank's application and related software seems proprietary. We're not applying through the SBA. Is there any penalty that you're aware of for organizations that attempt to apply with multiple financial institutions, or should they be limited to applying with one?
The rules state you're only allowed to have one PPP loan at one time. The way that's monitored, from my understanding, is, as I mentioned the process before, in our shop here, we get the application from the borrower, then we input the information for approval from the SBA. The SBA gives a number. Once that number is assigned, all the information behind that number regarding the company's name, TIN number, all that stuff is recorded. And another one, if they try to apply for another one, it would get rejected. So there's only, hopefully it would get rejected, but there's, again, it's only one PPP loan per borrower at a time.
Got it. And then we know that the SBA promulgated its set of regulations last Thursday night, giving rise to the big rush that all the banks had to get information. By your understanding, is there one set of qualifications that are mandatory for the program, or can a respective bank add any additional requirements?
I believe that other banks can add additional requirements. Emily might be able to hit on this a little better than myself. I know from our standpoint, we're trying to make it as simple as possible for the borrowers and us, even though it's extremely challenging and fluid as we're going through the process, and overwhelming. I can't voice the strong interest that we've had in this program. So with that, we're trying very hard to make it simple. The applicate for us, we're just accepting the application and the payroll information that's required with it. Maybe some others on the webinar here can elaborate on what some other institutions are doing or what they're able to do, but we're just focused on us right now and trying to take care of our borrowers and applicants at this time.
I would chime in, and just from Causeway's experience over the weekend of completing the application, it was with a different bank than Five Star, and they also had another local bank. They had a very streamlined and straightforward application process. It did not take that long. Thankfully, we have an accountant who was able to tap into our payroll records through Paychex and pull the data, all the data that we needed. That bank had made some additional information optional, but in terms of the things that were required to even submit, it was a very short list. So hopefully many banks are doing the same thing.
Perfect. John, any sense of if we were to go through this, particularly if the loan amount was not forgiven, when the first loan payment might be due and what the terms might be?
Yes, that information did come out in the guidelines that we were provided on Thursday evening. The terms of the loan would be an interest rate of 1%, payable over 2 years, and it is principal and interest is deferred for the first 6 months after disbursement.
And we have until June 30th to apply for these loans, or does the program either end before or go on longer?
Yes, it's the program ends, the guidelines say the program ends June 30th or until the funds run out. And that's the key to all this, and why the strong interest and demand as this gets rolled out is, I think it was 349 billion that was announced. And I don't know where the current numbers stand with that, but I can tell you every banker that I've talked to, their institutions have strong demand along with us. And we all don't know how quickly this will go. I listened to the president last night, President Trump, and he indicated they're talking about possibly add-ons. Hopefully that will happen. But right now we're just working with trying to get as many through as we can and use up this 349 billion.
Thanks, John. Emily, question here was about folks that have significant fluctuations in their hiring. So folks that have seasonal employees. And wondering about the implications. They said we bring on part-time staff for summer programs. How does that affect our application and potential loan forgiveness?
Yep. So when you're thinking about whether or not you, first of all, whether or not you qualify, as a seasonal employer, I would have that conversation directly with your bank or your lending institution that you're considering using for your PPP loan, filling them in on the details, and then asking them if they think you should qualify yourself as a seasonal employer. Where you just have fluctuations in staff between seasons, you're using your last 12 months, your 2019 payroll data. So the payroll data may fluctuate month to month. Some months in the summer, for example, if you bring on a lot more employees, you're going to have a lot higher payroll. But remember, it's the average monthly payroll, so it would average out across the whole 12 months. If you are deemed to be seasonal, your payroll costs, the way you calculate that is different. It will look at the summer seasonal months instead of just the whole 12 months. In terms of your employee count, again, I think it's a conversation you should have with the lending institution you're working with. Should you be using your employee count that's an average of the last 12 months versus a snapshot in time at the time of the application? And there are differences in the loan for seasonal employees, but it's beneficial if you are categorized as a seasonal employee to calculate your payroll on a condensed amount of time, because it will give you a higher yield of your payroll costs.
Okay. Another question for you, Emily. since I'm a relatively new nonprofit, I filed 2017 and 2018 taxes, but I have not filed 2019 taxes yet. Do I need to file 2019 taxes in order to secure this loan or grant?
John can correct me if I'm wrong from Five Star's perspective, but I don't think you do need to file your 2019 taxes. Some banks, I believe, are asking for quarterly tax returns or anything you will have filed. If you did file a 2019, they will want that what you have filed so far. But the payroll cost itself is based on the 2019. You don't need your 2019 taxes to be filed.
And then we had 2 organizations that reached out. I think we know the answer to this, that you have to go through an SBA lender, but if you want to expound on this, feel free. It says 2 organizations have said that banks don't seem to be ready with the banks that they've reached out to aren't ready with the application. Are there any alternatives? Can they go through Paychex, ADP, or any other organization with which they have a financial relationship?
Yeah, I would recommend, similar to what John said earlier, that you go initially to your bank that you have a lender or a banking relationship with, because that will, even though it seems like maybe you're waiting a day or 2 for them to get their application up, it would speed it up in the long run, because the bank will likely have to get a bunch of information on you, set up an account, and do some kind of additional diligence at the beginning. If you are in need of money today and your bank isn't up and running, you can always consider working with another one of the loan programs. There's the EIDL program that has the $10,000 quick advance. There's also another express program that's able to get up to, I think, $25,000 in the hands of people within 3 days of application there. So there's some wiggle room. Similar to what John said, I would caution against farming around and trying to find a lot of various banks. You don't want to be in a position where you get yourself kind of kicked out for one reason or another.
Terrific. So as we come to a close here, I want to thank our panelists and just give you each a moment. If there's anything else that you have in your notes or anything else that you thought, hey, folks needed to hear this, maybe it's a question that we didn't field yet, but if there's anything else that you think needs to be shared, now would be the time.
I mean, this is Todd. Thanks for that opportunity, and thanks to the Community Foundation for organizing this. It's, I think, providing a real opportunity for nonprofits to better understand this confusing time. So kudos to the Community Foundation for doing that. One of the questions you asked me, Simeon, was to couch these programs in a larger strategy for organizational sustainability. And one thing, as I thought a little bit more about that question, that I wanted to add was that, yes, this should only be part of your strategy, but it is the now part of your strategy. I remain concerned that especially small organizations that are really strapped for staff are going to be left out of this just because of their own bandwidth. So if an organization, certainly the health of the people that you serve and the health of your staff is the #1 priority, but this has got to be pretty close to the top of the list after that. And because I would hate to have organizations that could tap into and benefit from this, keeping their people employed, keeping their mission in motion, miss out on it because the funds were taken up by others who had more resources in order to make the application. So CauseWave stands ready to help. I know the others on the call are as well as is the Community Foundation.
Todd, if you don't mind, if you have it in front of you, can you give your steps again in terms of who folks should kind of reach out to first, second, and so on and so forth, just one more time?
My sense of that is that if you've got a finance officer on your staff, then that's clearly the first place to start. That's somebody who's probably been looking into this already, if you are blessed to have that. If not, I would go next to the treasurer on your board, and hopefully that's someone who works in the finance world or has experience in it, and they may or may not have started to look into this, but hopefully they'd have the acumen and the interest to do that for you. Failing that, if you have an independent financial audit that's done for you, reaching out to your auditors, the accounting firm that does that for you, they may be able to provide some guidance for you. Your banker is always a great place to go, and just I only put them a little lower on that list because of how overwhelmed they are with outreach right now. But I would definitely go to the banker as well. And then CauseWave is happy to step in and try to make connections with financial expertise volunteers who have a number of whom have reached out to us looking to help.
And if folks are interested in contacting CauseWave, what's the best way to do that?
If they go to our website, which is www.causewave.org, there's a banner across the top that links to an opportunity to set up an appointment, and we have available times for nonprofits to go ahead and book themselves into an appointment and tell us what it is they want to talk about. If the CARES Act is something they want to talk about, they should be sure to mention that so we can attempt to match a volunteer with some of that expertise into those sessions. And that's at no cost to the nonprofit.
Thanks so much, Todd. And Emily, if you want to share any final thoughts, and then also the best ways that folks might engage you or your team if necessary.
Yeah, absolutely. I think my number one feedback to people is, contact, go through that list of folks that Todd just mentioned and reach out and start the process. You certainly don't want to miss out on the money that's available now. So see if you're eligible and begin the process. And try to stay in tuned as to things as they continue to develop. We expect that there will be at least one additional set, if not multiple, probably multiple sets of regulations that come down from the SBA and the Treasury, particularly as it relates to the forgiveness piece, which is a huge piece of the puzzle that companies should be interested in understanding. So thinking about how you can set your organization up to not only receive the money in the first place, but have a smooth process in requesting the forgiveness at the end is important. Hardesty Crest at Emory has done a nice job of creating kind of a center for all of the information we're putting out about COVID-19 and things that are happening. You can go to our website and we have a banner kind of at the top that'll take you to our task force page that would list everything that if you have additional questions or webinars we've done, you could go there as well and get a bunch of information.
Thanks. And last but certainly not least, John, if you want to share any final thoughts, and again, the best ways for folks that want to seek you guys out for additional information.
Thanks, Simeon. We really just want to say thank you to you personally and also the foundation for giving us this opportunity to talk and support the community the best we can. We just want to remind everybody that this is extremely fluid, challenging times. I know from our institution, we're trying to do our best to put things together. This is an extremely popular program that's out there. There's been an overwhelming response, and I think we're all doing our best to accommodate the need out there to make our community better during these unprecedented times. So the best way to reach us is the same way as the other folks mentioned is our website. There's lots of information there regarding both normal bank products, but also special relief during these unprecedented times, whether it's through the SBA or just Five Star Bank in particular. And I'll also provide my personal phone number at 585-627-1372. If anybody's having a problem getting through the website, feel free to call my office and we'll do our best to take care of you.
So we want to extend a hearty thanks to John Fogel, who's the Regional Market President for the Rochester region for Five Star Bank, to Emily Cohen Esquire, an attorney at Hardesty Crest and Emory, and to Todd Butler, who's the President and CEO of Causewave Community Partners. We know that even in the best of times, the work that many of the viewers watching do is critically important to this community. Everything from distributing food to educating our children to sharing in our vibrant culture and arts community. It is in fact the case that nonprofits in Rochester nourish bodies, minds, and spirits and improve the lives of all of our region's residents. As a community foundation, we also appreciate that the extent to which our organizations and nonprofits take advantage of these products that are offered in the CARES Act are directly proportional to the extent to which we will have a strong recovery and position us for a stronger region. And so for that reason, we will continue to share information, provide updates and insights. We encourage you to share this video with other colleagues and other organizations. And if you have additional questions, feel free to reach out to us at grants@racf.org. We'll continue to collect questions, and we will share those questions with both this distinguished panel as well as other experts with whom we can engage. Please stay safe, and we look forward to our continued partnership, and take care. Thanks.
This conference will now be recorded.